Traders, I'd like to welcome you to the AMA for today's hybrid algo release. The way I like to do these AMAs is I just like to keep them super clean, super simple, coffee shop environment. Like we're all friends. This isn't some big sales pitch or yes, we did a webinar. Yes, we sell software, but I really want to just really do a lot of training today. I want to talk to you about my process in optimizing and testing. I want to talk to you about taking the system and nailing it down to like a defined focus, if you will. And we'll get into what I mean by that in just a second. But before we get started, I'd like to just ask that you agree to the disclaimer. Can everybody here just give me a yes that they agree to the risk disclaimer so we can move forward? We're all adults here. We understand the business. Win, lose, or draw. I can't guarantee anything. Wish I could. Wish I could. But we all get that, right? Perfect. Excellent. So now we got that out of the way. I want to talk a little bit about a couple questions. We're going to get into what you see on the charts here. We're going to get into a few things here in a moment. I just want to I want to ask a few questions with regards to you guys. If you were to pick one market out of the three or an other, can you just tell me what it is? Is it the S&P? Is it the NASDAQ? Is it crude oil? Or is it an other? And because it's really going to allow me to really kind of help shift the discussion, right? I mean, and I'd really like all of you to answer, please. Like I really want to gauge this. Well, it's not a question, it's a poll, Russell. You should see the poll pop up on your screen. It says, what is my favorite market to trade? The ES, the NQ, or crude oil, or other? And if you don't see the poll, it's probably because you're on a mobile device or maybe you're not able to see it. But if you want to let me know if it's the S&P, the NASDAQ, or crude oil. Those are the three most predominantly traded yeah. For those of you that are futures traders, right? If you're a stock trader, well, then that wouldn't matter, right? This is an AMA on the hybrid algo. Majority of you are futures traders in here, but we'll get into the stock trading stuff after. Different event. So the majority of you are trading the NASDAQ. I'm going to end the poll here. 75% of you have answered, so I'm going to end the poll. I'm going to share these results. Can everybody see it? So that's kind of like where everybody's at, right? 50% of you are trading the NASDAQ predominantly. The other 35% are trading the S&P. Are we safe to say that that's a pretty good focus point? So if we gauge the discussion today, it's, yeah, sure, we could talk about crude, we could talk about the euro, we could talk about everything, gold, freaking natural gas, if maybe Gilbert's around, right? But the end of the day is the majority of you are looking at trading your predominant market. So if I should gear this discussion to those two markets, are you okay with that? I mean, I could look at crude later, but for most of you, the NASDAQ and the S&P is where it's at. Okay, so I'm going to move the crude chart out of here. We're just going to focus on these two markets. Okay. Let's do that. So, as you know, we did the launch webinar yesterday with the hybrid algo, and the hybrid algo it's 4 algos in one. Now, that's a great thing, but it's also an overwhelming thing, right? Like that's, for most traders, you just want to start with one signal and get used to it and understand it. I think, sometimes when we develop products and services, it's exciting to want to give and add value, but it's also more important to make sure that you guys understand it. Can we agree with that? That it's more important that you understand it, you can use it, you can take it and run with it, so to speak, right? And because once you own a product or you have the system, you could obviously add 1 or 2 or 3, and The thing is that just because it's like a car, right? Like when you get into the car, you don't use all the features. You have a few that you use all the time, like the volume on your radio or your air conditioning or your power windows, right? But outside of that, you know, you really got to get good at driving it first, right? Now I see a lot of questions. I'm ignoring them. I can't focus on teaching and reading the chat box at the same time. I'll go through them after. It's not an offensive comment. I don't mean to piss anybody off. It's impossible for me to do my job here and read everybody's banter. Can we agree that that's fair? We'll save all the Q&A for after. We'll get into all of that after. Okay. So what I want to do is I want to talk about the systems foundation. And, you know, I'm going to say a few things that may rub a few people the wrong way, but at the end of the day, we all got thick skin. Are you guys okay with me just calling a spade a spade? Right? You guys okay with me just being fair and open? I mean, if you don't like it, there's the door, so to speak. You know, there's a few guys in the chat rooms and that, and they think that, you know, that because I have a reversal signal in here that I've taken that idea from somebody. I've got news for you. I'm the second largest developer in the world on this platform for NinjaTrader, right? You think I'm really worried about a flip trade, copying a flip trade? I think it's funny that people would sit there and say that I steal ideas of the members to release an algo when really I just added in there because users requested it and then gave them free algos because they asked for it. So I get a little pissed off when people sit there and say that I take people's ideas when I really don't. And let me give you an example. Do you really think that I'm new to this? Yeah, exactly, Bart. Tell them to here. Let me open up the yeah. Do you really think that I'm really worried about stealing an idea when I built all of this? Like, do you really think I'm that naive to or that inexperienced to need to borrow an idea from somebody else? Come on. Right. So that's my effort to just kind of stand up for myself for once in a while, because everybody in here's got big mouths sometimes. They want to sit there and point the finger, or they want to sit there and accuse. And I just think it's just there's no place for it. We're all adults here. It's time to grow up. Right? Exactly. It's petty, Bart. Exactly. It's immature and it's just really inexperienced, right? And I just don't have patience for it, right? It's a business of making money. Right? If you don't like it, there's the door, go find somebody else. Right. So that's my rant. That's my, I've earned the rights to say that. Right. But, you know, the chat rooms get pretty noisy sometimes. Right. But sometimes this is just, you know, you're adding value to your product you provide to us. Exactly. I'm going to open up the chat box for people because I think it's fair. Yeah. You guys can do me a favor and post it to everybody. It says, exactly, MJ, let's move on. So, the reason I want to say this is that we always get a lot of questions, right? We always get questions. Well, which signal should I run? Which algo is better than the other? And what I really want to do is I just want to kind of step back a second so that we can really kind of nail down what I'd like to focus on today. I think this algo deserves a few training sessions. I think when we go into the algo week and we do the training, I think rather than have an AMA on all the signals today, I think we should focus on which one I feel to be the strongest and in essence, the most unique, so that we can really kind of gain the focus point. Are you guys okay with that? We'll go into the momentum shifts another time. I really want to talk about the wicker. And I really want to talk about reversals. Okay. Mainly just because they play hand in hand and it has a lot to do with the hybrid nature of the Renko bar types. Okay. So yes, we have a cheat sheet. Let me pull it up. Yes, we have a cheat sheet and there's a whole bunch of tabs down here with a bunch of different templates, but that doesn't mean you just need to focus on all of them right now. And please don't. Like, this product is very comprehensive. It's not the VD algo. The VD algo is as simple as simple. It's just one little volume cluster in a bar. If it flips, it flips. This algo is, you can go as simple or as complex with it in terms of the Renko bar sizing that you want to create. So let me give you an example. Yesterday, we talked about every single is independent. Yes, it is. But when you go into the actual strategy section and you open up the algo, let's go in here for a second. When you open up this algo, you're going to see at the top here, there's several signals. There's reversal signal. I'm going to change this here for a second. There's the reversal signal. There's the wick signal. There's the Momo signals. When you turn these on in a checkbox, it's going to open up parameters for that checkbox. So if I want to open up, if I want to add the reversal signal in here, okay, it's going to open up a setting inside of it. Okay, so let me just turn this off for a second and show you what I mean so that we can understand it. Okay, if I want to turn off the wick signals, the settings are gone. If I go into the reversal signals, I open this up. The reversal signal has one setting that drives it, and then it's on a flip trade. It involves the depth of pullbacks before you start engaging in reversals, right? So let me just kind of talk a little bit about one at a time. We're going to talk about one at a time. And what we're going to do is we're going to just kind of explain the logic behind it, and then we'll go into testing results. We'll explain it. I really want you to understand the foundation to the signal. Okay. So if I open up the reversal signal here and I click on this, this basically means that I can control the pullback. Well, what does that mean? Well, if I'm looking at, and don't worry about the name down here. I'm going to rechange this name because for the purpose of doing this, I just want to make sure that the instrument full. There we go. And take away the wicker. I don't want there to be any confusion. So like, let's say I want to set the bar type to a different fractal. Okay. I want to go in here to the data series and give me a fractal. Give me a bar type setting on the S&P that somebody really trades a lot. Like anybody, I don't care who it is. Like, just give me an example. I'm going to give you an example. Renkos, maybe a 4-tick Renko or a 5-tick Renko. Maybe we're going to use a 5-tick Renko, a 10-tick reversal, and a 4-tick offset, right? It's a pretty standard, Renko setting, right? So if you wanted to take this algo and run it on whatever market or time frame you want to use, it's built for Renkos. It has to be used on Renkos. Okay, this is not meant for, well, I mean, you could trade it on pretty much anything. It's just I can't tell you it's going to work, right? So if I have a setting in here that allows me to be able to control, okay, the pullbacks. If I go in here to the, remove that. If I go in here and I want to basically control the pullbacks, I was going to show you here. I can control the depth of the pullback, meaning I'm not going to take a reversal trade unless I've had a pullback that's a large enough depth in the opposing direction. So you see these like little flips here? To me, those are like, it's not really a big pullback, right? Like you get a run, you get a little blip, right? This is all in a big time frame. What that is it's just consolidation. That's not a pullback. Like a run and then a retracement, that's a pullback to a reversal, right? So when I say, okay, I want to set it to 2 bars. If I set it to 2 bars, I'd get a flip trade here and I get a flip trade there and I get a flip trade there and I get, it's not a good idea. But if I set it to say like 10 or 20, then that means if I get a run, I need 20 bars to pull back in this direction before I take the reversal to the opposing side. So why would you want to do something like that? Because when you trade stuff like that, you'll only be taking signals on big rips like this, and then you get the flip. Impulse waves, corrective waves. Yes, that's the whole point. Like if I had a 10 bar setting, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. If I had it set to 10, I would have got a long on that flip, but I would not have gotten it on this trade. Does that make sense? I would not have taken these flips. It's not a flip trade. This is a trend pullback system. It's just we're using wave theory to be able to identify minimums and maximums. And you can optimize for that, which is unique. You can optimize each market independently to be able to say, well, because each market pulls back differently, right? So I'll give you an example. If I wanted to take this setting, right, and I'm just going to use an example, and we're going to do some education today, right? We're going to do a little bit of testing today, strategy analyzer. Okay, we're gonna do a few things here that I think might. And I know a lot of you just say, hey, give me the settings. I just want to run the algo. I don't want to do any work because I'm lazy. Well, I'm here to call you lazy if you're not willing to learn this stuff, because you have to. You can't just buy indicators and algos and expect them to do things for you when it's your job to know how to set them up. Right. So what I'm going to do is I'm going to teach you how to do this properly so that if anybody here wants to ultimately go into building and testing different variables, because I don't know the markets you love to trade, or if you want to trade on different variables, smaller or bigger bar types, I need to be able to show you the best way to approach that. Okay, so let's just go in here. Let's set up an optimization. Okay, and I'm going to use maybe 1 or 2 days just for the sake of it, just to kind of keep it super quick and effective. I'm going to go to the hybrid algo. Okay. Now, what we're going to do is I'm just going to load a template, and then we're going to edit that template so that I can keep it super fast. Okay, so we're not wasting everybody's time here. So it's a hybrid reversal. We're going to change the bar size setting. Okay, we'll change the setting. Okay, hybrid reversal. And what I'm going to do is I'm going to show you the optimization parameters. You see here, this is a back test. Let's switch it to optimization now. And it's important because we're going to just do 2 today. We're just going to focus on 2 signals today. So enable reversal signals true. That's what we're doing. Then what I do is I can open up that optimization parameter. Now, what I'm going to do is I'm going to assume that a 2-bar pullback is not a pullback, right? But if I'm on a 5-tick Renko bar, if I'm on a 5-brick Renko and I can see that that's there, like, what would give me an example of what you think would be a good starting point? I just want to see if anybody here wants it. I'm going to make this dynamic because I think learning is a dynamic experience. Give me, how many bar pullback do you want to start with? A 10-bar pullback, a 15-bar pullback, a 5-bar pullback? 10. Okay, so let's just put 10 in here, right? Well, I could go as high as like 100 if I wanted to, but I think that's a little bit big, right? So let's do like 10 to 20 bars. And I can run it with like maybe a 2-tick increment, right? So it'll just basically do 5 variations, right? So it's a good start. 10 to 20 bar pullback. I'm only going to get reversals on big rips in the market. Now, here's the cool part. Everything else doesn't matter. I'm going with 2 contracts for the sake of just keeping it simple, right? Now, when we talk about understanding a pullback or a reversal, by definition, if I'm going to enter, excuse me, on that bar on the open, on a market order, you'll get 1 tick of slippage. By definition, if you're going to take the reversal, most of you are going to put your stop around the bottom of that level. Would we agree? How many of you guys would agree that most of you guys are probably not going to put your stop in the middle here, hoping that it just rips right away? You're going to give yourself a little bit of breathing, right? Yeah. Now, that doesn't mean you shouldn't have a 2 or 3 tick stop. There's a very good likelihood that it's going to kick you out because you're right below the previous low. I mean, it's a good starting point, right? So what I'm going to do is I'm going to take this. It's a 10-tick reversal. This bar is a 5. We chose a 10-tick reversal and we did a 4-tick offset, right? So basically, if I'm getting 1 tick of slippage on the entry and I want my stop to be 1 tick below the bar, that means I need to have a 12-tick stop. You guys with me on that? I'm always giving myself an extra tick on the entry and I'm giving myself a tick on the low, right? That way I don't get low ticked if it's a double bottom and it needs to trade through the low and actually hit my stop. Everybody with me? So what I'm going to do is I'm just going to go in here and I'm going to turn my stop loss. I'm not going to optimize my stop loss right now because I don't even know if this is the right size of a bar, right? And this is how you can take this type of a system and put it on any type of reversal so that you can find the best profitable parameters on the bar types that you want to trade, the variations that you want to trade. I'm going to just open this up here for a second. 12 tick. We'll give it a second here. And are you guys with me on this? I just want to make sure I go step by step and then you guys understand how to break this down. So let's go through here now. We're not going to worry about trailing stops and we're not going to, anybody in here asking about discounts and swaps and stuff, like just hold all your questions to the end, guys, because I can't teach and read the chat. Okay. So let's go to targets. I'm not going to worry about trailing stops, and I'm not going to worry about any of that stuff right now. What I want to do is I just want to look at targets, okay? So the way I look at trading is I don't have a bias. I don't have a bias on I need a 0.3 R multiple or a 1-to-1 R multiple. I let the system and I let the bar size and I let the strategy tell me what's most effective. I let the statistics tell me what's most effective, because as a quant trader, I don't have human bias. Never have. I don't believe in it. I don't believe in R multiple trading. I don't believe in 1 or 2% position sizing. I believe in systematic evidence. Okay, that's the difference between a discretionary trader and a quant trader. Would you agree that if I could show you a very profitable system where you risk $1 to make 20 cents and you have 30 winning trades in a row and 1 loser, but you're still massively profitable, how many of you guys would argue that that's a good system? It's a quant system. If it does what it's supposed to do, it's a great system. But then you have somebody that has a bias that I need a 1-to-1 R multiple. Well, you're inexperienced when it comes to quant trading. Now, I'm not here to point the finger or call anybody out. I'm just saying you have much to learn in algorithmic trading. So when I look at profit targets, I'll go as little as 2 ticks. Think about this. If you have a system that will produce 2 ticks consistently, and you can do that over and over and over again, you can scale size if you have evidence that it's a very profitable approach. That doesn't mean it is, but I'm going to start there, right? So we'll go into profit target and we'll say, let's go for 2 ticks. And I'll go maximum 1-to-1, like maximum, because I'm trying to scalp for prop trading. I don't want to give my money back to trailing drawdowns. Does that make sense? How many of you guys with me on that? So if I got a 12-tick stop, I'm going to go up, and I'm going to go up in 2-tick variables so I can cut my optimization down. Everybody with me on that? Now, here's the great environment, time of day. Now, I'm 3 hours different than Eastern right now. The way, I don't know, like I live on the other side of the world right now, and the time zones are all messed up. So I'm going to just basically assume we're going to start, we could start at market open. You could start in pre-market. If you know you can only trade in the morning, then there's no point in optimizing in the afternoon. Like, it's just, you're wasting your time, right? Like, you're completely just taking stuff that is going to kill your PC resources and it's going to eat your time, and there's no point. Give me the time window that the majority of you are trading. Like, some of you are lifers sitting behind the entire screen all day. I get it. I love tinkering too. But how much of you guys are trading in the morning and that's it? Pre-market to the morning? Pretty much, is that a pretty good fair? Yeah, your morning traders, yeah, 8:30 to 11:30, open to noon. Okay. So that would be 5:30 a.m. my time. And that would be to the European session. Would you say the European close 11:30? So that'd be 8:30. Okay. That's a 3-hour window, right? It's a good starting point, right? If you're going to test. Now I'm going to always exit at the end time, and I'm not going to ignore my trade. Okay. We're not going to talk about money management yet. Why do you think we won't talk about money management yet? Anybody here want to? And I'm going to walk you through these. Like, why would you? It's per individual, yes, but we don't even know that the system is stable on that time frame yet, or on that pullback setting yet. We don't have enough information. You see where I'm going with this? So I'm not going to sit there stacking layers of complexity to my testing or to my profitability if I haven't even been able to identify if I should be applying money management practices. Get the settings right first. Exactly. So we're gonna just minimize this. Now here's a cool part. With this system, I can, and this is why it's called a hybrid system, because let's just pretend that this is your chart, right? I could basically have a pullback 20 and then get a reversal there, and then I could have a, and then get a reversal there, right? I could be trading reversals without direction of trend. But you could also have it where you only trade reversals in the uptrend. So this can become literally a standardized reversal system in oscillating markets, where we can immediately just take away trend filtering completely. Or if you're somebody that only wants to trade in the direction of trend, you can take this reversal system and apply it to directional markets. Because now you're saying that if this is above the 100 EMA, I'm only going to take reversals long. Do you see where I'm going with this? This is no longer just a reversal system. This becomes a trend system if you add the trend filters into this. Does that make sense? So let me ask you this. Would you rather me look at trend direction or non-trend direction? Because this system can handle any market condition. This is why when I said I built this for range-bound markets or trending markets, you can do whatever. A couple of you guys want to look at trend. Anybody here want me to apply some trend filters in here? Okay, we'll apply some trend filters. So here's what I'm going to do. Just so you guys know, just for the sake of understanding the way that NinjaTrader's infrastructure is built, NinjaTrader cannot optimize multi-time frame back-end data feeds. It's just a limitation. They're just it's a retail platform. It wasn't built for institutional quant needs. Now, what does that mean? Well, your time frame must always be set to the 1. You cannot optimize. You can backtest different time frames, but you cannot optimize different time frames. It'll throw errors and it won't give you the information. So when you're optimizing, the time frame must always stay to a 1-minute feed. Well, what does that mean? Well, that means if you want a 5-minute EMA or a 10-minute EMA, you need to really crank up your period. So what I'll do is I'll literally start with like a 1-minute 10 period. I'll crank this all the way up to a 200 period because that's like a 20 period EMA on a 5-minute chart. You get where I'm going with that? I'll rank that trend all the way up because then I'm saying I'm going to trade this in the direction of the 5-minute trend. Right, because that's the whole point of using the 1-minute feed. So I'll run that and I'll run this and let's say I could put it to a 20 period here just to keep it simple. Like I don't want this to run so many iterations that it takes forever to do this, but I'm going to show you why you could run this in 20 increment settings, right? We'll give it here 20. Let's do that 20 just to keep it simple. Now I'm not going to use momentum on this. There's no point because you're never going to have momentum on your side if you're playing a reversal. Everybody understand that? You're always going to have momentum against you. So let's do this. Let's run this on the S&P. It's 12 tick stop, so it's tradable on the S&P. Okay. And let's run this to the 5 tick bar, the 10 tick. We'll do the wicker next, guys. We'll do the wicker next because this is the fun part about the system. And I'm going to spend a lot of time training on this, as well as the VD algo and the other systems in algo week when we come up. And thanks for your patience, guys. You know, hopefully you only get married once in your life, right? So I'm only banking on this being the only time. And that's happening next Friday. So, I mean, you can imagine it gets a bit busy. So I do appreciate you guys letting me get married and having a couple of days off, and then I can come back and we can crush it. Right? Well deserved, Bradley. Thanks. Yeah. So for those of you that want to chat to the panelists and everybody, if you go down to the chat box, just choose to everybody, post to everybody. You should be able to change your setting, or it says posting to hosts and panelists or everyone. Yeah. You just do that. So everybody can ask questions and type in here. So here's the thing, right? Like a couple things you want to know about NinjaTrader is NinjaTrader may not be able to download historical data during market hours. I just believe it's a kinetic issue. So you may not have the data from today, or you may not have the data, but we'll try it. I don't know if it'll download it automatically because a lot of times it won't give it to me, but we'll try. We'll try it. During market hours, I talked to Kinetic and they said, we only allow you to download from our server outside about market hours, which I think is completely freaking stupid. Like, how can you not allow your users to download freaking data at any time during the day? Like, that's just, you don't want to get me going on what I think is good and bad. However, so let's just run this for a couple days. Like literally, if I'm looking at April, let's just run it from Monday, right? Saving bandwidth costs. Well, it's actually their servers. They don't really have the right infrastructure for that type of needs, right? Oh yeah, absolutely. If you're in another conference, you can't be here for the whole day today, I'll send you a recording. Okay. So let's just run it for a couple days, right? So breaking at the end of day, yes, I'm always going to include commissions. I always like to change this to 256. I don't like to run this to infinite, right? I'm always going to fill orders on touch. I'm going to basically, I want to keep the best 100 results. I want to keep as many data points as possible. I'm not optimizing my data series. Now, this is a question that Jeff and I talked about a lot. When you optimize, you can optimize for a whole lot of different things. You can optimize for win rates. You can optimize for profit factor. Profit factor is a really good foundation. But what you can also do is you can optimize for net profit. Like you have two things that you're really interested in: your drawdown, your winning percentage, and your net profit. Would you agree that that's important? Your drawdown, your winning percentage, and your net profit. Those are the three foundational elements that drive anything, in my opinion. Well, you can optimize for net profit to see what's the most profitable settings, and then sort by the lowest drawdown to find that. If you optimize for net profit, you have the ability to see a whole lot more data. If you optimize for profit factor, you may not know what the most profitable settings are. And that's where I've really learned about optimizing. I'll switch this to a lot of times net profit, because what is the goal of us traders in here? Is it always just to worry about how little I lose, or is it I want to know how much money I can actually make as a trader? What would you say? The profit, how much net profit can I make? So if I can find the most profitable settings that give me the most reasonably lower drawdown, you have to be willing to take losses and have a drawdown. High win rate would be good, profit and high win rates. So that's why I'm going to optimize for net profit. So I'm going to be able to do that. And that's why I keep 1,000 settings. I could keep 1,000 results if I wanted to, because then I can sort. I can sort through them. You see where I'm going with this? This really opens up a different mindset to how testing can be done, and how you can take a lot of things and really improve on them. So exit on close, yes. So I'm going to set this up as a save. And then we're going to tell the ES 5.10.4 AMA test set. Now, I don't know if this is a profitable bar size. Probably isn't. It's a small bar size, right? But I'm going to show you that this may come back good, bad, or in between. I have no idea. I've never looked at this system on this bar type, but I want to give you the foundation to how this system can be tested. And that way, if you want to use a 6-tick bar type or a 20-tick bar type or a 40-tick bar type, which could be really exotic but very profitable, we'll get into that. Everybody with me here on this? So let's see how many iterations this is going to give me. Make sure that we're good to go. And let's try it. Jesus Christ, that's a lot of iterations. Let's take a look and see. It's only 3 days. So we'll give it a second. It might not give me the ability to do that. 8 hours, 10 hours. Yeah, probably won't do that. We'll see if it kicks down here. Sometimes it'll kick down in a second, and I'll close this down if it doesn't, because you can't optimize for that big of a time frame, right? It's just too big. So I'm gonna abort this. Give it a second. We're gonna cut it down. How do we cut it down? Because I'm only optimizing for a couple of days. So we'll give it a second here. Usually you can have like 10, 20. Yeah, it's gonna take a while. Yeah, it's gonna take a while. We'll give it a second to reset here. There it is. And so let's just kind of take things back a little bit. And let me just double check a few things here. Let's do this. So let's take this down and let's bring this to say 5 bars, right? That'll drop the iterations down a lot. Let's take profit. Let's up that to say I want 2 ticks. I could increase this to 4 ticks of profit, right? Which will basically give me a whole lot more iterations. You see where I'm going with this? And I could literally draw up this to 40, right? If I just really want to just kind of get some information here, let's just take a look. We'll just put that to 4. That should drop me down drastically. Okay, let's try it again. Give it a sec. There, and then that should be pretty fast here. We're only doing 3 days of data. Maybe not. It's the S&P. We'll have to see. If it's not, then I'll have to drop it down even. Or maybe I'll just do 1 day. The S&P loads a lot of data, so let me just do that. No, I'm going to drop it down just a little bit. I'm going to go just do 2 days of data. I'm going to go just a little bit less, okay? Just so you understand me on that. And the reason I'm showing you that is I'm going to drop the EMA down to 100 just to kind of give us a little bit more time to be able to get some data here. Okay. And whenever you see that, you just cut it down. Let's just bring this to 100. Yeah. And let's just bring this to, this will give me 4 iterations. And let's put it to 20. That'll give me 5 iterations. Okay. And I could probably put this to 40 and make it a little bit better. And let's just leave it at that for now. Let's just see how much data we're getting. Okay. Run it. I'm going to kill that. I'm going to go, I just want to go a little bit smaller. 100 gig fiber down there. Might as well have 100 gig. I'm not sure. Yeah, we have fiber optics. It's insane. Yeah, we have really good fiber optics internet down here. So I'm gonna open this up just a little bit, and I'm gonna show you what I'm gonna do here. Just bring this down to let's double check here. Let's put this to 4. And there we go, 4 ticks. I'm going for 1 point instead of 2 ticks. Just little things like this you can do if you have the time. You can do that, right? Remember, we're on a small bar size setting, so that it'll take a little bit of time. And I could probably drop it down to 2 days instead of 3 days. And these types of things, just to get a foundation, right, that you can use. And let's take this. Let's put this to. I still remember the invite from past AMAs. Yeah, absolutely. So let's try this. And let's put this to 40. Let's just keep it smaller. Okay, let's run that. Let's see what that gives us. Let's see how much time it's going to take to run that. The S&P takes a lot of time sometimes to run the data, as opposed to. We'll see if it kicks in here. It might drop down. It might, if it doesn't give me, I might just do 1 day just to kind of demonstrate the efficiency of that. And it's 30 minutes is too much for a webinar for us to optimize on. It's going to take too long. We'll just run it for 1 day, because I'm running 3 days, but I just want to show you, maybe we'll just do 2 days of data. And the S&P always takes a little bit longer. Right? If I test the wicker, it's a whole lot faster. We'll go into this because there's a lot of trades on the reversals. So we'll give it 1 second, guys, and I'll just cut it down to 1 day, so it'll be a lot faster. Right, so let's just go here 2 days. Now, you don't want to optimize for 1 day and expect to just run a strategy like that. That's just crazy. You would never do that. Now, this might just take a little less. And now, before I go in any further, did everybody understand how I set that up? Did everybody understand how I set that up? And I went through that process and all of that fun stuff. You see how fast it's kicking in here. It might take a little bit of time and all that fun stuff, right? It's picking up speed pretty quickly here. Now, while that's optimizing, right? Like I know that might even 20 minutes. Hopefully it'll drop down a little bit less, and it's dropping minute pretty quick. It'll start to speed up very quickly if it doesn't. No, this is not curve fitting, Don. This is finding the bar settings that you want to use. I think everybody uses these terms lightly: curve fitting, over optimization. How do you start with information that you don't have? Like retail traders that are discretionary trading don't have any fitting. They don't even know what to look at. They're just going by, I hope this works, that level's solid, I'm going to take the trade. Here, what we're doing is we're trying to find stable parameters in smaller sample sizes. So I'll give you an example. If I can find information that's strong in 1 week, okay, and then all of a sudden, if I'm able to take those settings and extend them back 4 weeks and they still hold really strong, that's called out of sample testing. So when you have out of sample testing and you have the ability to look at randomization test periods and it still holds very strong, then you know you have really stable settings. Does that make sense? Now, this is too much data on the S&P for me to do in an event like this. So what I'm going to do is I'm going to kill this. I'm going to just change the settings just a little bit, just to make it faster, because I was testing the NASDAQ test, and the NASDAQ test a little bit faster on the wicker. So I'm going to go up here. I'm going to show you what I think needs to be done here. We're going to basically just go and we're going to drop the pullback setting down a little bit and make it a little faster, right? But it's a really good starting point to teach you how to, and we'll do the wicker next. We got lots of time. This is an AMA. See here how we have 15. We can just set it to 15. Put it in 5, that'll drop our iterations down. And, you know, if I want to just do 10, 10 ticks, or even 8 ticks. I could do an 8-tick target and just go 2 iterations on the targets. Yeah, right here. So then basically, let's just run that. I should drop it down drastically. And I'm just showing you exactly, because now what you're doing, like, I've just cut my testing time down like 5 minutes, right? So there we go. It'll drop down here and we'll be good to go. That'll be fine. So while we're waiting for this to finalize, so I can teach you how to go in and understand the data, what I'm going to do is we're going to just take a look at the wicker. Now, can everybody see the wicks on the charts? The wicker is the other signal. Okay, the wicker is one of the other signals. Now, if you have this bar, this is the NASDAQ for a second, okay? The reason you want to have really exotic reversals, because if you have small reversals, you have the bar size, and then you have the reversal setting, and then you have the offset. You guys can be my bro, okay? Now, you have the bar size, the reversal setting, and the offset. When you change the bar size, all you're doing is changing the trade frequency. So if I drop my bar size, I'm going to increase the trade frequency. Does that make sense? If I increase the bar size, I'm most likely going to decrease my trade frequency on any system. If you're using the VD algo, if you have bigger bars, you're probably going to have less signals. If you use smaller bars, you can have more signals. Like, it's just it's a trade-off, right? But with the wicker, I don't want a lot of changes in direction. I don't want trends and pullbacks. I want really long runs. Why do you think that is? Like, I want really long legs in the market, really long legs in the market. I don't want to see reversals. If you have it set wrong, you probably would have had a reversal here. You probably would have had a reversal there, and it's not a reversal. Does everybody understand that? So what I'm trying to do is I want to create the Renkos in a way where I hardly ever have reversals. But when I have a huge wick that doesn't reverse, that's because I have the settings set right. So I'll give an example. If I go in here, I know I'm optimizing, so bear with me if I have a little bit of a data lag on this. Okay. If I have a 20-tick bar size, I'm just using the NASDAQ on 20 ticks. I have it set to an 80-tick reversal, but I could even better yet, I could set this to like 5. Let me just see what 80 times 5 would be 100. 20 times 5 is 100. I could set this to a 100-tick reversal. I could set this to like, 20 times 7 to be 140. I always like to leave the offset 1 tick less than my bar size, because the offset, I'm just trying to smooth the legs of price out. Does that make sense? So I'm going to just show you an example of what this would look like if I had a huge reversal like that. Now, why do you think that is? Because all that chop that was here that chopped me earlier on those settings, like, take a look at these legs. Like, that's amazing. That's amazing. I want that. I want that. I'm setting it on purpose because this signal is designed to take trades when the wick comes in and doesn't flip. When the wick comes in and doesn't flip. When the wick comes in and doesn't reverse. Even here, this big wick still got enough for a profitable trade on that, depending on your target setting. And so this is designed this way. Those retests are amazing follow through. Yes, they are, Brad. Yes, they are. So let me just go in here and take a look at this data here. I want to see if it's finished optimizing. Getting close, 5 minutes. That's not bad. So let me just kind of explain here. Let's just go back to the last couple of days. Let's just go back and take a look at this. Now, you might say, well, I'm not getting enough trades, because you might say, well, the 20 the 20 bar size is too big for me. I want more trades. Okay, but just remember this. Okay, just remember this. If you drop your bar size down, you're going to have bigger runs. You want to make sure that you're relatively taking reversals to that. So if I'm taking a 10 tick bar, then I might want to use a 100 tick reversal, because I don't want the market to be whipping all over the place. Because you can control the system to take the first wick, and that's it. You can control the system to take 2 trades in the same direction. If you have the reversal set like this, where you have these really big runs, then yeah, like you could take the first trade, and then you could also take the second trade and be done with it. Does everybody understand what that means? Like, and when you see this, like, do you see this whip here and this whip here? That's ultimately where everybody gets their asses slapped. Like when you see that, that's where everyone's like, man, I thought the trend was going this way, and then it ripped out. Because the reality is that when you set these exotic Renkos like this, I'm not trying to trade trends and use indicators. I'm looking at price and price alone on this. This tells a story. Like, this tells a story that most people don't even know exists by using such customized details. Like, take a look at this trend for a second. If you didn't have the reversal set to such a large number, okay, if it wasn't set to such a large number, you would have had a reversal right there, and it's not a reversal. It's the market taking all the absorption and then loading up and then ripping. Like, this tells a story that you would never see unless someone like myself was to teach it to you this way. How many of you guys can see what I'm talking about here? Just, you don't need to worry about trends and indicators and momentum and divergence. All that shit doesn't matter with quant trading. All that matters is that you understand what this system is designed to do. It's serious. It's really, really serious to be able to see the data from this point. Now, the reason I like to take the first trade only is because in situations like this, when you only get a little run like this, depending on how you set your system, you would have taken the trade here on that wick. That's a retest. You would have got long here, and you would have been able to bank a profit, even on a short leg. That's why I don't like taking the second trades. Now, that's a preference, guys. That's a preference. Okay, that's a really big preference. Okay. Now, if you were to say, Sean, what's your favorite signal here? I'm a quant trader. I literally trade what I think the data tells me, right? So if I see that I got a really good setting on the reversal trades, like this, if this comes back really profitable, and I'm not going to sit here and say, well, I like one better than the other. I'm going to look at the data and I'm going to be objective to it. Okay, I don't have a preference. The data tells the story. So let's just take a look here for a second. You can see, right? You can see what I also do is I have a setting in the algorithm that I can only take wick trades after a certain amount of bars. Why? Because if it's a retest off a reversal, it's going to happen at the beginning of the leg. That's a retest off the reversal. Interesting enough, it came right back up to test the high of that wick. The data tells the story, but you wouldn't see all that in the smaller time frame noise that everybody's used to looking at. Because most people are really not able to read the market. They don't know how to read it. They don't understand it because they're looking at so much minute information that it just throws them for 15 decisions. Okay. So let's just take a look here. You can see the wick stories. Like, let's just go to today for a second. Jesus Christ, this is a big run. Let's just go to today. Big runner today. Yeah. Now, I have a setting. And one of the settings inside the Wicker algo, oh, I think the data just came back from the optimization. We'll stay on the Wicker here. We'll end the Wicker. The event will end on the Wicker. We'll do a lot of testing on the Wicker too. Give it a sec here. It's froze a little bit. There it is. Okay. Don't you dare crash on me, Ninja. I'll be upset if you do. Perfect. So you can see here that, first of all, you would never, ever run a live trade account or anything on 2 days of data. Like, I'm not here to try to sell you on, hey, this is a profitable system because it's giving me 2 days of profitability, okay? But you can't ignore the fact that it did show you 2 days of profitability, right? Like that's a good sign, right? It's a good piece of information, okay? But it's also a good piece of information to understand that I've got 1,000 sample sizes here. So I have the ability to go through and look at different sets of data. That's why I like to let the data tell me. So what I can do is I can sort by net profit, right? You can see here, I could take a look at the net profit. I can sort by highest to lowest. I can sort by max drawdown. You can see I can sort by lowest drawdown. I didn't have a drawdown over here. There wasn't any losing trades. You see this? I have the ability, when I optimize for net profit, I have the ability to sort through the drawdowns. I have the ability to sort through profit factor. If I want to sort through profit factor, look, I can go from 1 point. I can get a whole lot more trades on these settings, but it doesn't really make sense for me when I have $500 drawdown, I have $500 profit. That's not a really good model. Does everybody understand that? So what I'm going to do is I'm going to sort through profit factor. Clearly, it's a good option. I'm going to just go here and just sort by net profit. Net profit has told me that I've got a section here that gives me $1,000 profit for $300 drawdown. It's a 4%. That's a 4 profit factor. It's pretty good. 9 trades in 2 days. How many of you guys would agree that that's a pretty decent amount of information to go and take a look at how the chart looks? That doesn't mean you're going to run with that, right? It doesn't mean you're going to basically say, hey, let's do that, but let's take a look. Okay. Now, what did this come back and tell me? This told me that 10 bar pullback was better than a 15. How am I seeing that? I'm seeing that here. That tells me that my stop loss is 12. We set that to static. We also told me that it's better to have an 8-tick profit on this. That was an 8-tick profit. Makes sense because I'm getting more profit, which is the higher side of that. I bet you the ones that came back with less profit, right, will be the 4-tick target. No, I'm not comparing 2 different markets. I'm looking at the first optimization from the other sample size that was running before we go back to the Wicker, MJ. Remember, this is the S&P. I was running it on the reversal template. The Wicker was on the NASDAQ. We'll go back to the Wicker in a second. I just want to talk about the data from the prior signal. So you'll also see here that, and here I made a mistake in the optimization. You see this? Basically, I should have set, this was a mistake on my part right here. That should have been set to 530. So that's why I had so many iterations. Human error, right? A lot of parameters going through the test. So what I'm going to do is I'm going to go back to the Wicker. I'm going to run this because I can't trust that sample size now. Do you see that? When you see that, I can't trust the data because there was an error there. I want to make sure that I go back and rerun that. So what I'm going to do is I'm going to move this off to the side, and this is why it's an AMA. We're going to teach a lot about training, and let's run this again. Let's run it. Give it a sec. It'll be a lot faster now. There it is. There it is. Whole lot faster. See how fast that optimization came back in 2 days? Bingo, bango. We'll give it a sec. That's probably why I could have run a couple more days. I had that iteration on that. Yeah. There it is. So let's go back. You see how the data came back differently? Totally different data, right? So let's go back here now and let's run it for a couple more days. I want to basically run this, and let's talk about that for a second. Now that I have that set up properly, I'm going to put this back to 20 and put it back to the way I had it before, because now I understand what happened. We'll go into the Wicker is my favorite. I just want to show you an example of the reversal, because the reversal actually gives you a whole lot more trades, but the Wicker is really amazing. Let's go to here. Let's put it to 20, 200. Set this up to 20. Are you guys learning? It's always good to learn. It's not just about buying things. It's you want to make sure you learn things as you progress in this. I'm going to basically show you a lot of things today that normally haven't been talked about, which need to be talked about, right? Very much so, because if you're going to be trading for an algorithm or you're going to use it, I would argue that 90% of the people using the VD algo would have completely different paradigms if we spent more time training on systems. And that's on us as a company. We want to make sure we do more training. It's just takes time and people, manpower. Right. We have that in our plans to do a lot more training on the algos. This is a year of a lot of algos coming out. So we're going to do a lot more training on it. Right. So let's just run this to the beginning of the week. Let's run this to the 3rd, and let's just run that. So let's do that. So there's 90 iterations over 3 days. See how quick that runs, right? Now, if this doesn't come back in 3 days, like really badass, like really awesome, then I don't want to trade the 5-bar type. Like it's that simple. Like I'm not going to sit there and stay on the 5-bar type. I'm going to literally move off the 5-bar type, move to a bigger bar type, because I'm going to look at the number of trades I get per day. And if I'm getting 5 to 10 trades a day, but it's not successful, then I would never use that. Does that make sense? We'll give it a second here. Take a look at the data, completely different data. Now let's sort by net profit. That's the highest net profit, 4 trades. The next big trade here, let's go down to max drawdown. 4 trades, 7 trades. I still think sorting by net profit, and then you go here, and if you look at net profit, this one here had no drawdown. 4 trades, okay. Let's go back to it. You can see what this did though, eh? This basically had a really deep pullback and it was with trend. Boom. Right? This one here came back, pulled back. Let's take a look. Not enough trades. This one had a really deep pullback with trend. This one had a really deep pullback with trend. That's exactly what's coming back here. So this system's, this setting parameters is basically saying that if I'm going to take reversals, it's going to be really deep pullbacks with trend. Does that make sense? And that's what you're seeing here. Now, remember, this is just a small sample size of data, right? Really deep pullback with trend. What's the EMA on this? 40. Running back a 40 period EMA. Now, you might say, well, Sean, that's 2 days. 2 days of trading. I don't know if I have today in there. No, it's only the 3rd. The 3rd is Monday, Tuesday, Wednesday. Okay. But I don't have today. Okay. So that's 4 trades. Average trade is about 1.9. So you're getting 1 trade a day on this. Okay. Yeah. High quality, less trades is better than a lot of lower quality. Absolutely. Those scale up with a lot of contracts. Absolutely they do. But take a look at this. The next step down here is this one here at 4 trades, 2. Let's go to profit factor. Let's sort by profit factor. The next best profit factor was this one here with 4 trades. Yeah, it's perfect for prop trading, Bradley. But remember, it's still too small a sample size. So one of the things that you can also identify is that I can open up. I have a very restrictive pullback setting here. I'm going in bars of 5. On the S&P, that's a lot of bars. So what I would do is I would maybe drop that down to 2. Minimum pullbacks, I would put this to like, say, 4. Right? These are the things, and we're only looking at a small amount of data. So 4 pullback to 20, go in increments of 2, and I could increase my breakdown to 2. Like, I'm not looking at a lot of data. I just want to see if there's better settings on the EMAs and this, because I can already see that there's stability on this bar type. I just want to make sure that I get a little bit more granular data. I'm not changing time. I'm not changing anything. Okay. So let's run that. While it's waiting, it's going to give us some more iterations, and we'll go back to look at the wicker. That'll take a couple minutes. So let's move this out of the way until it's ready. So let's go back to the wicker here. Now, let's take a look today. One of the things that I look at is inside of this system. Let's go into the strategies. Give it a second to load. When I'm looking at the wick signal, the parameters are different. Okay. The first thing you're going to be paying attention to, now this is really important here. For those of you that really like the wick signal, this is time to really pay attention. You can choose how many trades you want in every leg. If you want the first retest, pick it to 1. If you want the retest and a pullback, put it to 2. I've never tested anything more than 2. Does that make sense? I've never tested anything more than 2. Now it says max bars to wick signal. That means after 8 bars, I'm not going to take a trade if I set it to 8. If I set this to 100, that means I'm going to be able to take a wick. If I've got a leg, the market comes down, reverse, and then I've got a leg that goes like this. If I get a wick, really big wick in the middle of the leg, and that's like 100 bars, right? Then that's a good thing, right? So one of the things that I do is I pay attention to not restricting. I will basically open up my max bars when I optimize, and I want to basically see how many bars I should set it to. And we'll go through the optimization parameters for that in a second so you guys can see that. Now, I always set it to ticks. You can set the wick based off of a lot of information. You can set it to the body or the ATR. I keep it to ticks. Okay, I keep it to ticks. And when it says minimum wick size, well, if you're using these exotic bar types like this, what I like to do is I like to go in and I actually measure. I will literally go in and say, okay, what is the size of these wicks? How many ticks is that? Like to me, that's not a wick. That's like a little uptick. Sometimes that's all it takes. It just reverses and then it takes off, right? But sometimes I like to see that a little bit more higher quality signal, if you will, right? If you look at when you see these wick retests, that is good. But if you look at these little blips, to me, I would rather take the signal off of that bar than just bank on that. To me, that's not a wick retest. But you can test for that. You can see for that, right? If I go back and I take a look at the size of like that versus that, big difference. But you would never see that information if you didn't set your bar type to be the right setting, right? Which is why I have the reversal set to 140 so that I don't get a reversal here. Because it's not a reversal. It's the market faking everybody out and then ripping for one last push, which would be most likely divergence on a smaller time frame. So let's kind of talk a little bit about how do I choose the wick size? Well, I measure it. I will go in and I will grab a ruler and I will ask myself, like, how big is that wick? 12 ticks. Okay, it's 12 ticks, right? If I know that the bar size is 20 ticks, I might set it to 20 tick minimum. So I need a wick the same size as the bar. That might be too restrictive, but that might be my minimum, right? That might be my minimum. So I'll give you an example. I have an optimization here, and we're going to basically do one together, and then we'll go take a look at different examples. This is a wicker optimization on the NASDAQ. I'm going to change it with you. We're going to go through some information here. Like this produced a $36,000 profit, but I'm not going to trade that with a $15,000 drawdown. That's insane, right? So what I'll do is I'll just go through the settings here, and we're going to talk about how we set this up. Max bars to wick signal. I set it to some randomly large number because I don't want to have a max bar. I don't want to restrict the amount of bars I have. Because I don't know how long a leg is going to be. And I really don't care. If I get a massive wick in the middle of the leg, and that's the first wick in that big leg, like if I look at this, and I go back and I find a leg that has one really, really big wick in it, and it's only one big wick, then I'm going to want to trade that anywhere, right? Like if this only had one giant wick and it was like right there, but had no weather wicks right here. Would I want to take that? Absolutely. It's a wick trade. So what I'm going to do is I'm going to basically restrict, no restrictions on this, 1,000 bars. I could put this to 10,000 bars if I really wanted to, just so that I don't have a restriction on it. Right? Just, and leave it at that. Is everybody with me? This is important. We'll go back to the other optimization in a second because it's finished. We'll talk about it. So let's talk about minimum wick size. Well, if the bar size is 20 ticks, excuse me, if the bar size is 20 ticks, I might put a minimum of 10 ticks, but that's going to be really tiny wicks. If I put it to 20, I never set a maximum, because the maximum would be the reversal technically. Like if you really think about this, you can only have a wick so long until the bar reverses, which you got to think about for a second. If I have a 140 tick reversal, 141 ticks will cause the reversal. So that would be my maximum. I could set it to a minimum of 10, and I could set it to 141 or 140, right? And I could set it in increments of 5. Because I don't really know. That's the thing. You don't really know until you know. And especially if, like, I've never run a test on this bar size. So this is what's fun for me, is that I know the wicks are very, very profitable trades. Because every time I test them on every bar size, I just get really good results across the board on everything, because the wicks concept is very, very appealing, I guess you would say. But from a quantity perspective, well, if I know that my stop loss, I need to basically go in here and let's take minimum wick size, 10 size, 140, go to 5. And let me just see how many iterations that'll be. 140 divided by 5, that's 28 iterations. That's not too bad. So quantity, I mean, this is on the micro, right? But you got to think about your max risk per trade, right? Like how much is it per micro, per contract? Does anybody here know what the MNQ, what is the cost per contract per tick on the NASDAQ? Anybody have that information for me? Right, it's 50 cents per tick per contract, right? So 50 cents per tick. So if I'm running a stop loss, think about this. This is really important, because this is the difference between somebody that's comfortable having really big stops on the NASDAQ. Let me ask you this. If you have let's use this example. This is really important. Only need to go up to 120 wick size. No, Jeff, it's 140 reversal. Minus 20 on the bar side. Yeah, that's right. You're right. 120 tick. Yeah, you're right. Because the wick would only be after the bar size. Yeah, that's why Jeff's head of dev. So I'll go back here and I'm going to increase this to 120, because we take away the bar size. What does that mean? The wick cannot be inside the bar. It has to be the bar size minus the reversal. So I'll give you an example here. The entry on this is on bar close, right there. You enter right there on the bar close. So what happens is you get this entire wick that sucks all the inducement in, and then boom, it closes and you get short and you just ride that down. These are really, really sexy trades. But what I want to do is I want to talk to you about stop placement. This is really important because there's no right answer here. If you have a wick like this and you're entering here short, you could put your stop loss literally here and be out with a 1-to-1 or get kicked out right there. You see that? You could get kicked out if you have a very tight stop. I also know people that are willing to put their stop above the reversal setting. If I'm getting short here, I'm going to set 140 tick stop. What would that be per contract? 140 ticks per contract on the MNQ. 140 divided by 0.5. You're looking at $270. I don't know, my math is wrong. 0.5. Yeah, it's $70. It's $70. Okay. So that means if I leave a stop here at $70 per contract, to have a stop size as big as the reversal setting. Okay. Now, there's no right answer there, guys. So let me go back to the optimization for a second. What I'm going to do is I'm going to go down to my stop setting, and I'm going to let the data tell me. If I go down here, and if I have a minimum stop of, say, 2 times the bar size, so that means if I got 20 ticks, if the bar size is 20, that means that's 20 ticks right there, and then maybe 40 ticks would be there, right? Would you say that that's a pretty good starting point? Like, you're giving yourself 2 bar sizes, right? So like literally you could put it at 20 ticks and just have it right there. But I'm just trying to give you an understanding of, like, if you did it at 20, you could scalp for 20 and be out for a 1-to-1 right there. You'd be done on that trade. Like, do you see where I'm going like this? Like, this is the difference between understanding how different settings can be used on different templates. So what I want to do is let's just put it at 20. Let's put the stop size at 22, because remember, you're entering with 1 tick of slippage and you want the stop to be above it. So 22. And then if the bar is reversing at 140, then that would be 142. Does that make sense? So I'm going all the way from the bar size all the way up to a full reversal if it rips, right? I'm just really opening up that stop size placement, right? Because that would give me the ability that if I got long or short, let me find a double wick, an example. We get 2 wicks back to back. Great example. Let's say you got short on this one here and you had a target here. If your stop is tight, you're kicked out on that wick. Does that make sense? If you're here and you have a very tight stop, you're kicked out on that wick. This is why I will test both variations. So this is why I'm going from a minimum stop to a maximum stop, and I'm going to go up in 10 tick increments because it's not a lot of ticks on the NASDAQ, right? So if I go into profit targets, what I'll normally do is I'll ask myself, if my minimum stop is 22, right? Most people are maybe going for a 0.5 R multiple minimum. You know, you're risking $1 to make 50 cents. You might go a little less, 0.25, if you're a super high frequency scalper, if you're looking for really quick targets. So let's say a quarter of that would be 22 divided by 4. You're looking at 5 ticks. 6 ticks. So let's just, my minimum profit target could be 6 all the way. I'll just round that to 8 just to keep it even numbers. And then if I want to go all the way up to a 1-to-1 risk reward ratio on 142, I can test that 142. And then I can go up in, 142 and divided by 8, you're 17. So I could divide it by, just put in 2 tick increments, right? So 142 divided by 2, you're looking at 71 iterations there. Like, this is just a lot of iterations, right? But I'm just showing you that I could go up in 2 tick increments, and I can do that. I could go up in 4 tick increments and save it a little bit of time. Now, remember, we talked about this. With the wicker, it's a bit different. You might understand that you might not get your legs right in the morning. You might have less trades. So what I would do is I would open up the entire day and let the data tell me which days. If you can't trade in the afternoon, then you set that down, right? You set that. Right. So let's just start it in the morning at 5:30 in the morning, like I was setting here. So 5:30, I won't make the same mistake and do this. But I want to show you how this can really unfold, because I've never tested the NASDAQ and I wanted to show you this in real time. I decided to do this together. So that's 5:30 and that's to 2 o'clock. Yeah. Let's run that all the way to market close. 13, 3 hours difference, 1 to 3. Yeah, so this should be 13 because I'm 3 hours difference. Okay, so exit at end time, MNQ, bar size 20. We're going to switch that to a 140 reversal. Okay. And let's just run it for this week. Just see the last couple days, right? I'm just showing it to teach. This is not, here, take this template and run with it. I'm just showing this to teach. Break it end of day. I'm going to keep 1,000 iterations just to see what the best results are. I can optimize for net profit and then ultimately exit on session close, right? So normally what you want to do is now I'm not using higher timeframes in here, moving averages. Not necessary at this point because there's such big rips and runs. I'm going to run this. Let's save this. So that we're not losing it. And let's see if that's too many iterations to run. Let's just see how that runs. And then when we're doing this, we'll let it tell us. A lot of iterations, but remember, we're going to see how much data it takes to run it. Might come back a couple minutes. 21 minutes, 15, 16, 17, 13. We can leave that. We'll run that 10 minutes. Are you guys okay with that running for 10 while we go and talk about the other 9 minutes? It's quicker. We'll let it run for 10 minutes and let's just take a look at this data. Okay. So let's take a look at this data from the other signal and we'll talk about what we did. Well, we changed the settings, right? So let's go here and let's optimize for net profit. So clearly the next one down didn't have a losing trade for 4 right here, right? So this was the highest net profit. The next highest net profit to draw down was here with a little bit more trades, but you can see it really drops down here. So let's take a look at this one. So this one here tells us I got a 12 tick stop. It's a 1-to-1 R multiple trade here. Let's just go 4 trades over the past 3 days. Okay. Not a lot of trades. You might be lost. Absolutely. You might be lost, smart, because you maybe have no experience on algo testing. So what I'm going to do is I'm going to show you a course that we have for everybody that's going to help you understand that. 9 hours, really, that must have a data loop in there. So let's, it really just decided to do something there. So I'm going to close that out because something happened on that optimization. Anybody here that's lost or new, trust me, you're in the right place. I get it. I'm just going to double check the iteration on this. Yeah, we're gonna make things a little bit faster here because I think using 2 tick increments on the NQ is a little bit absurd because the NASDAQ data surges tend to, yeah. Don't worry, anybody who in here is new, completely new, you're going to really value the course that we have for everybody. So just put a yes if you're completely new. Okay, so let's do this in minimum wick size. Let's go up in 10 tick increments. Okay, everybody here that's new, you're in a really good place to learn for algos. I can assure you this. Let's run this in quantity. You see here, this is the problem. I have the quantity to, we didn't set it. So let's just put it at 10 contracts. Just keep it at 10 contracts. Max risk would be approximately $700 on a full size stop. We could put it at 5 contracts. This is a mistake on my part again. See, sometimes you put all the data in here and you forget to check something. So we could do it at 5 contracts. Just remember, it's all relative to the optimization that comes back. 5 contracts on a full size stop, you're looking at $350 that we were just looking at. Okay, so there's the iterations. Let's try that now. Let's try that. And let's put that back to 5 because maybe that'll fix things a bit. We're going to try it. See how many iterations that comes back. And then I'll show you the course that comes with all the algos and everything like that. Everybody's going to benefit from that. There it is. Way faster. That's going to come back and see if it kicks down a bit. Sometimes it gets hung up on a data loop when you have too many iterations. Right? Well, Bradley, some people don't think so. Some people in here just think all we do is sell things to make money, but they don't realize it costs a lot of money to keep a company going. So if you don't have, you've got a big team, right? And we do a lot of help. We help a lot of people, but some people get angry. They want to point the finger. So this is too long for the event, 27 minutes. So I'm going to cut the iterations down. We're going to basically, and a lot of the, people that don't succeed, they will take the onus on education. But a lot of times people can do a lot better if they just learn a little bit more and they understand a little bit more. That's just, and that's not just algo trading. I'm talking about trading in general. Algos is just one part of trading, right? I'm going to change this down to 10 iterations, and let's put this to like 8 ticks. 8 ticks is not a lot of ticks in the NASDAQ, right? Like it's not a lot of ticks. Let's try that. Let's try that. That'll come back really quick. Okay, so we'll let that run. So let's go take a look at the chart here. Okay, so let's just take a look at this data. Now, 4 trades is not enough trades, but let me just kind of show you what it's telling us. The information is telling us. Let's go into the chart. Okay, let's take a look at the chart. So remember, this is coming back with trend. Let's go back to the start of the day right here. Boom, boom, boom. The reason these trades are coming off in here is we could have got a trade here. It might have missed the 1 bar, right? Like if you think about it, like why did this one fire and this one not fire? Okay, maybe this had, let me see how many bars is required on the setting. Take a look here, 20 bars, and maybe that was 19, right? So you can see where maybe adjusting that, you know, maybe adjusting that, right? Like this, if I set this to 18, minimum 18, you probably would have got the signal there, right? You probably would have got the signal there. And that's why I like to go take a look at things and it's like, okay, like it's good information. Like this one probably pulled back 20 exactly. This one pulled back 18. So you could have had increased it, but you wouldn't have taken all these little pullbacks. Like this one would have been out, this one would have been out, this one would have been out, but you would have caught this one and this one if you dropped it to say 18 bars. And these are things like where you can really see that if the real profitable settings are coming around 20, you could optimize from like 18 to 20 and get different data samples, right? So let's continue back and let's take a look here and I'll show you. Now, to me, 1 trade a day is not enough, but sometimes 1 trade a day that's really profitable is what a lot of traders want. Like not everybody needs to have 20 trades in a day, right? But if you're somebody that's looking for that activity, I would argue to think that that's not enough trades, right? You need to be in the market to make money too, right? You can't not just sit on the sidelines all the time. So what I would do is I would maybe put like a minimum pullback in here of like 10 and not a maximum. I would literally put like a minimum pullback of 10. Put this to like, right, like a minimum, and I would put like a maximum of like, you know, 100. Right. And you can change that, right? So these are the things that allow you to be able to test for that. You know, so that way it's 10 and 10. And I just, if you're going to have a maximum, like, why would you have a maximum? Like there should be no maximum, right? Like, because the deeper the pullback in the direction of the trend, most likely you're going to get a rip on that, right? And so this is why I just want to share with you, like when you look at the number of trades that come back from a signal, 4 trades, okay, that's fine. But there's 7 trades on this one, but the drawdown's too high, right? So this is why I don't think that personally myself, I personally don't think the 5 bar type would be ideal because I'm not getting enough information that's coming back, right? Which is why I think that testing a different bar size parameter would be a better starting point for this signal. Does everybody understand that? Now, if I were to basically if I were to basically take the chart here, let's look at this for a second. Remember, we had it on a different setting, right? Now here's a completely different concept. You're taking reversal trades on an exotic bar type. This is why I was testing with this in the first place. And it's like, okay, if I'm going to take an exotic bar type, you're going to take the reversals. Watch. If I want to take the S&P and I want to use an 8-tick bar, let's say I want to take a 4-tick bar or a 5-tick bar, and I want to run it with a 25-tick reversal. You see where I'm going with this? Like, now you have a completely different piece of information, right? Like you could be trading those reversals, and those are pretty solid reversals. Do you see where I'm going with this? Like you're no longer in a trending market, you're trading reversals. Reversal, 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 reversal. Would have got stopped here. See that? You would have got stopped, but you would have been in another trade long on that. You see that? So this is where you start looking at, instead of trying to trade what everybody's used to seeing, think about using the system in a way that it could change the narrative to what you're most likely never used to seeing. Makes sense? Because you can see here that if you were to use an EMA and a trend filter in these types of days like this, take a look. If I add, let's try this. And I'm just waiting for the NASDAQ Wicker test to come back. So I'm just bouncing from two different system signals and just to show you a few things. Okay, let's say I want to put a 200 EMA on here. Okay. If I did that, if I put a 200 EMA here yesterday, you only would have ever traded the short reversal short. See that? But you're not getting flipped around in all the back and whipsaw of reversal trading. You would not have traded long if you had that. Right? Now, understandably, I understand that, Jeff, but I'm just giving them context, right? I'm not saying you'd use the 200 EMA because that's based on this time frame. It's based on the 1 minute. But I just want to kind of basically kind of explain why we can use the, I guess you would say, the reversal signal in a very agnostic way, because I could come in here and take this exact same optimization, apply it to a completely different bar size, right? Completely different environment and a completely different breakdown. And you could have way different results because you're using a different reversal size setting for the bar. You understand what I mean by that? So what I want to do is I just want to let you think on that for a minute, because I could come back in here and I could take this reversal and I could literally say, okay, on the S&P, I want to use a 5-tick bar. I want to trade it with a 25-tick reversal. So let's just go in here. Let's just take this and minimum pullback. I could maybe put minimum pullback 2, right? I could put a maximum pullback of like 20, or I could put it as 100, right? And then leave everything else the same and test it on a different variation. Does that make sense? So I'm going to do a different, I want to do a different event on testing this system on the reversal signals. I think what I really want to spend time with, and this is more of a preference of my own liking, there's two signals that drive the bus here: the reversals and the wicker. Okay. And so they're the best testing. They're the best performing. When you look at reversals, I would look at ultimately using a hybrid bar size for reversals. It keeps you different, but I know a lot of people that are going to test it on 5 ticks and 20 ticks and different settings. How many of you guys can see though what I'm looking at on the wicker? Like you guys can see the wicks, right? Give me a yes that you can see the power in the wick. Absolutely. So let's go back and take a look at this setting for a second. Now remember, I'm just looking at micros here. So like I'm just look at this 0.2. So this is telling me a story here for a second, okay? I'm coming back with a 90% profit factor on 12 trades. Now, this is too small of a sample size, please, like, but by any means. But if I go into the setting on net profit, okay, let's take a look at this. 9 trades, 3 to 3. This one here had 0 losses on this one here. The first one had 0 losses. Let's take a look at it. It's only $169, but it might be because I'm only trading 5 micros on a very, very, very small objective. Does that make sense? But it's still very, we haven't had a loss in the last 3 days. Like I just want to take a look at it, right? Let's go take a look at it. Okay, now, okay. Let's just go in here. And I just want to teach you a little bit about understanding the data a little bit. Okay, so take a look here. Let's take a look at the days. There we go. So let's go into the chart. Now, Jeff and the guys are fixing something, and I'm going to tell you right now that they're fixing this shit show of a fill issue. Jeff, if we can get on that, that'd be nice. So one of the things that we're noticing with the NASDAQ and with everything, and this is something that'll be improved very quickly on all algos, is that whenever the market has the same timestamp, you see here, these 2 milliseconds, we have it set right now where we won't take fills because the timestamp, we look at the millisecond from this candle to that is the exact same. But if you look at the next bar, it's not. Like it's so these 2 bars had the same timestamp, but the next one didn't. And as a result, it's too restrictive. So we're fixing that. That'll be dealt with so that these trades would have fired off. You would have seen these trades execute here, which would have given you different statistics, which we'll have it very quickly, which means we would have had a fill there. There would have been a whole lot more trades entering on this back test because we have it as a safeguard for some of the other algos in the engine, but it needs to be removed or it needs to be turned on or off. So take a look at this. Great example of understanding what this setting came back as. Now, do I mean you need to use these settings? No, but it's something to be considering understanding why I'm teaching it like this. Take a look at this signal. Huge wick. Came down, boom, 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 fired off. Very quick objective. I'm just looking for a quick target, but I got a big stop. Now, some traders are gonna be like, well, whoa, like, I don't know if I can get around that. I don't know if I can stomach that. Well, what if you go back and you optimize for an entire month and it tells you that it's very successful, right? And you see here, this one here is 8:30 in the morning. This one here came back. Let me take a look at the size of the wick. 70 ticks. This came back with a 70 tick wick. So it's basically looking at really, really big wicks. Now I know that if I go back and I ultimately change the settings on those wicks, take a look at this for a second. I can go back and you're going to see a change. Let me just go in here and show you. I know for a fact that that's too big for me. I know that I see way too many wicks, and I would basically drop this down to basically doing a minimum wick setting of 10, 20, right? Which means I would have caught the long right here. I would have caught the short right here. Does that make sense? So this to me is too restrictive. A 70 tick wick is just too big for me. So if I come back and I basically say, okay, I'm going to basically take a minimum maximum of 10 ticks, or I want a minimum of 20 ticks, 20 tick wick, and a minimum max of 20 ticks. So let's just do that. And I'll show you. That means any wick that's 20 ticks or more, we're going to get a signal. There's no iterations here on this. So this will be a whole lot faster for me to come back and understand that. But I just want to kind of show you that you can control this. Let's run this one more time. There you go. It'll be super fast. Minute, it'll come back in a minute. Because I'm not doing any iterations on the wick. I just know that I need a wick bigger than 20 ticks is what I'm saying. I don't care about how big the wick is. I don't care. I just want it to be bigger than 20 ticks. And that's the whole point of understanding the wicker signal is I just need to know that if I get a wick that's bigger than 20 ticks, I'm going to get fire trades. So when you take a look at these ones over here, that would be disqualified. That would be a trade. Because to me, that's a wick signal. Now, if you say I want a 70 tick wick, well, that's fine. You might not have a whole lot of trades, right? But you'll have really solid, high quality, really big wick trades. Okay, let's go back and find that optimization. Now we're going to come back in here and take a look at this. Max bars to wick signals. Let's take a look at this. Minimum 10 bars. I can go, maybe I want 100 bars, right? I want 200 bars, right? Or I just don't care about that, right? You can understand where I'm going with this. Like you can change this however you choose to. Let's go back here. Minimum, maximum. I want to just take a look at the chart for a second. One second, guys. So great example, right? Like a great example of our edit. Jeff, can you check with John when that's going to be done? Because I want to really be able to get the data sample size on that so that I can test this. Because these are missed fills that would normally be filled. Yeah, I want to make sure that that gets out ASAP. Let's take a look here. So to me, big time, right? Big time stop losses. For me, I'm going to explain a couple things. I've also seen very, very good success with very tight stops in this system. Okay. If I go back and show you the template that I ran on the other bar side variable, remember this is using a 2019 140. No problem. Let's go back. I'm going to show you the way I set up. I'm going to show you the template that I had set up earlier for the other variable. I'll do this in a second, guys. I really want to make sure I spend some time on the wicker. So I put a minimum, maximum 1,000 bars, minimum wick 80, maximum wick 80 ticks. And I think I put it like minimum wick size 10 ticks and quantity 10. Stop loss 22 to 82. Target 12 to 82. Now I ran this on a different bar size. I ran this on 20 and an 80 reversal, not a 140. So if I go back and change this, I'll show you not on 140, on 80. Take a look at this for a second. Just a slightly different narrative. Not such, you get a little bit more reversals. You get a little bit more whipsaw, a little bit flicky, right? You guys understand that the moment you drop your reversal size down, you're going to get a little bit more movement, but that also doesn't mean it's wrong. Okay, so let's do that. And let's run it for a couple days. There we go. Give it a second. Now, this could ultimately be very good on the S&P, but with slightly smaller bar size than the NASDAQ. Like you wouldn't use a 20 tick bar on the S&P. Like if you were to look at the S&P here, take a look. Like running it on a 5 tick bar, you can get some pretty big wick signals on a 25 tick reversal with a 5 tick bar. You might want to do it with a slightly, like take a look at these two runs today on the S&P. Okay, if you had the reversal too small, you would have had reversals here and that would have been, those are good shorts. Those are really good shorts, right? This was a really good long signal. Does that make sense? So I would not want to change their reversal too much on this. I would want to keep a fairly large reversal on the wicker. That's really, really important. Yes, NQ more wiki, so variables would have to accommodate for those wicks. Bart, let's go into that for a second. Let me just go into that. I'm just going to wait for the statistics to come back on that, and we'll take a look at it. Yeah. Because what you can really do here is you can really do things that most people would never even consider to be valid. Let's take a look at the wicker here for a second, okay? Let's take a look at net profit. Okay, let's take a look at max drawdown. Let's take a look at the lowest drawdown. Let's take a look at the highest profit to the lowest drawdown. So there it is, 630, 24 trades right here. Take a look at this. Smallest drawdown, 2.7 profit factor, 2.9 profit factor. You got 24 trades in the last 3 days. It's a lot of trades. 87% hit rate right here with only 120 drawdown. That's a pretty good profit to drawdown ratio with a high degree of success at 87%. It's very, very solid in terms of information. Let's just take a look at this for a second. I just want to teach you to start reading the information so that you can understand. It's not just Sean's templates. It's if you just set it up right. Like, let's just go back and take a look. Take a look, one right there. So take a look at what we're doing here. This is a scalp. What we're saying is we're going to take the big wicks, but we're going to do tight stops and targets. Do you see this? So to me, there's nothing wrong with that. You could have R multiples, you know, a 1-to-1 R multiple or a 0.7 R multiple. What is this even at? This is at 0.4. Okay, for this one. You can do the different variables. Okay, take a look here. Look at this. See these wicks here? These are too small. These wicks are too small for us to trade it. Too small of a wick. Now that's because I have it set to a 10-tick wick size. If I'm using a 20-tick bar, that's half of the bar size. Make sense? Let's continue back. So to me, this is too far down. Like I don't like taking trades so far in the leg. Like I find that if I don't get retest right away, like I don't want to take trades. Yeah, first of the leg. I want to take it's a decision that you'd make if you want to take it. You know, you might want to drop this down to say, well, let's take a look. How many bars is this leg? And so how do you do that? You come in and I'll show you. Take a ruler and you calculate how many bars that is. It's 132 bars. So I could basically say half of that, or I could take 75 bars, or I could take, you know, 50 bars. I could drop this down, you know, minimum 1, go to 50, or I could put this at 50, right? These types of, you can capture. You're going to get a better signal when it's right at the, exactly, Bradley. You're going to get a better signal. Give it a second here. Ninja always wants to take his sweet ass time here with this optimizer. It just sits there like that. It just doesn't. So let's put 100 bars, right? We could do 75 bars in there. Let's just do that. 75 bars, minimum, maximum. We'll run this optimization again. Let's just take a look. It'll probably come back with completely different settings, different results, right? We'll get into this for a second. I just want to show you a couple things that I pay attention to when I look at the wicker signal. Okay. Now you say, yeah, but I missed a whole lot of wicks in this leg. Yeah, okay. But that doesn't necessarily mean that you're only going to catch that one leg. You see all these missed trades in here? We're fixing that. Like, trust me when I say this will be fixed hopefully by the end of today, right? It's just, it's not ideal. Okay, take a look. What we want is we want trades like this. We want to capture trades that come in right off that. Like I want to catch the wicks here. That's the key. That's the key. You're going to get some wicks in the middle of the trend and you're going to catch it. Like even this to me is the key. Like those wicks there are key. Because that's the market's trying to figure out, are we really reversing here or are we changing? Like I get we have it here, but I would rather reduce the noise. And I would really just rather like come into max bars, like say 50 bars, right? And really reduce the narrative down. I might miss a whole lot more trades, but I can be that selective. I can choose how I want to trade this. Okay. You're not locked into just one way of doing it. Minimum wick size, let's just put it to 10. Now you might say, oh, I'll show you here. Let's just do 10 ticks. I'll just show you how this will change the narrative. And you can change multiple targets. Absolutely. You can do a trailing stop too, which would be, ideal to see. Okay. So let's just take a look at this. Let's just run this now for a second and we'll run this a variable here. Let's run this. Now I have other settings on my other testing laptop I'm going to bring over here in just a second, but are you guys enjoying the AMA? Like I know I'm going back and forth with showing you different variables and you're probably like, well, Jesus, Sean, which setting should I use? This AMA is not about just here, take these settings and run with it. I really want you to understand the system. I really want you to understand what the system is doing so that you can modify the bar size, because it's all about the bar size on the wicker and the reversal. Okay. Let's take a look at profit factor. There it is. A great example of a completely different narrative. $700 profit for $300 drawdown, 24 trades, 95% hit rate. Let's go take a look at that, right? It's probably very quick, tight scalps, very small R multiples, but it's showing very decent profitability compared to drawdown ratio. And it's giving me a lot of activity in 3 days. 3 days divided by that's 8 trades in a day. Okay, just something to understand. Let's go take a look. Take a look at that. Now I can sort by net profit, and I can take a look at the biggest profit to the smallest drawdown before we drop down is here. That's the one I'm paying attention to. The smallest drawdown to the largest profit. I don't really, profit factor will be happening, but the win-loss ratio affects the profit factor, which is why I don't really like to optimize for that just by itself. Let's go and click on it. Let's go take a look at this setting. $700 profit, $300 drawdown. Okay, that's $7,000 on 10 accounts if you're using this in a trade copier environment. You can see the different narrative here. Okay, now we could probably improve a whole lot by doing things. Take a look at the half hour of the day. Okay, look at the spottiness in the afternoon, right? Not a lot of trades happening in the afternoon, right? Just something to think about. And we can change the entry time. Yeah. Take a look here, half hour day, still spotty, right? Keep it to the morning. Yeah, you can do that. Okay. So let's just go back here and put the summary analysis, this, and let's go into the chart. Okay, so here's a great example of taking the reversals not too far in the leg, having quick scalps to get in and out, and running with it. Not having too tight of a stop loss, right? So that you don't get kicked out if you get a couple wicks like this. Like this, it's pretty decent variable, to allowing yourself to follow through, right? You would have missed a trade here on the fill. This is different time of day, so it's not taking those times, right? Now you would have missed 2 trades here. Like these would have been a profitable trade here. That would have been a profitable. The little fix that we're coming will fix that, guys. So I can assure you don't worry about it. We're good at fixing things quickly. Right? Same thing here, you know, and this is a great example of, you know, wicks coming back to kick up before the run up. Stop runs. Those are stop runs. If you really understand what that is, that's a stop run that's coming into that. It's a stop run, right? This is a market structure level on a smaller time frame. That's a stop run, and then they rip down. Now you could change this to two signals per direction. You could literally change this to, like, watch what happens when I say I want to take 2 trades off of a big leg. So if I go back here, max wick entries, let's just do minimum 1 to 2. Watch. You might find completely different variables if you want to take the trend trade and the reversal as well. Like, there's an opportunity there to consider that, right? Watch what happens. We'll go back into this and give it a second. It doesn't take a long time to run that, right? But I'm also testing higher reversal settings. Like this was one. Remember I said I hadn't tested the NASDAQ, so I didn't have a whole lot of information on the NQ, which is why I wanted to do it together in a group with you guys so that you can see how to do it properly. I think it's better to just understand what we're looking for before you just start, hey, let's run a template. Because how many of you guys like the concept of the wicker? I guess that's probably a better question. So take a look at the profitability changing here. Take a look at what just happened. Look at all the different opportunity that came from allowing 2 signals per direction. Okay. Like if you think about this, like by adding the second trade in those big legs, what you're saying is I'm going to take the reversal and I'm going to take wave 2 pullback. So let's sort by net profit and let's take a look at this. Largest net profit, small drawdown. Let's sort by drawdown just to take a look at the smallest drawdown. Right there. That's a sexy stat right there. Right, it's a sexy stat. Right, let's go and take a look. How many trades per direction? 1 entry per direction on that signal, okay? Let's just go back and just test with 2 signals. I just want to see 2. I want to see what comes back from just testing. Well, I actually have settings. I'm just, for me, the NASDAQ's just a brand new market. Like I tested the S&P very well, but the S&P moves a little slower, right? I just never tested the NASDAQ. Like I just had to pick a market. A lot of people trade the S&P, so I literally just ran with the S&P. But this is the difference between getting this tool set and running with it. It's I'm going to show you here how I would set the NASDAQ up, like a little bit of an exotic environment. Let's take a look. These are 2 settings. So here's a great example. This has 2 max wicks per entries. This one here, too big of a drawdown for me. Too big of a drawdown. But this next one here, that's the smallest drawdown and it's got a big profit. This one here. So let's take a look at net profit. Sort by net profit. These big numbers. What's the smallest drawdown? Right. 446. Right here, 322. That 4 profit factor looks really nice. Okay, so let's just take a look at this for a second and just 96% win rate. If you want a wick algo, you need a wick instrument. Absolutely. And I think these results will change a lot when we have the fixed timestamp issue where we don't even have to worry about missing trades. Here's a great example of where you would have had 2 back-to-back wins in this leg. Win, you would have had a win if we fix that, which we'll get a new build out here ASAP. Yeah, and then for a month, exactly. Same thing here. There it is. Right, boom. Let's wait for it. 1 wick in the right direction. Now remember, I have a max bar setting set here. So max bars to wick signal, I think what needs to happen, that means if I don't get a signal back to back right away, I need to change this. So let's just put this to minimum bars 10. Let's just put this to a maximum 100, just so that you guys can see that if I'm missing a signal here, take a look at this. If I'm missing this signal here, I would have missed that. That would have been the trend trade. Because remember, this can be turned into a reversal system, or it can be a trend and reversal. Okay, that's why I want you to understand the difference here. Jeff, if I want to put this to 100 bars minimum, like if I set it to 100, there's not going to be a minimum maximum, right? Brain's getting a little foggy. If I set this to 100, there's not going to be a minimum maximum. It's just going to be 100, right? Jeff's my compass, right? So let's leave it at that. Let's run this. Give it a sec here. We'll run it. Let's try that. So I'm just going to run this, and we're just going to give ourselves a little bit more breathing room in that trend. And we'll be able to open that up. I just like to show different variations of how the system can be tweaked to be able to show you what it can and cannot do. And then we'll just take a look at today's data on the NQ. And I'm gonna change this for a second, because I think personally for myself, to me, that's not accurate to me. Like, you see how this pulls back? It pulls back. The market's not reversing here. This is consolidation. This tells me that the reversal is set too small for what I'm looking to accomplish here. So if you're saying, Sean, tell me what we should set this at. Tell me what we should set this at. What I'm going to do is I'm going to tell you 20 bars. You can put it to 10 bars for all I care. The bar size means nothing, really. I'm running, I don't think it matters what version of Ninja I'm running. I'm running. Yeah. Yeah. That one. So when you look at this, okay, and you take a look at the way that this bar setting is set up, what I would do is I would run this and I would literally change this to like it would really need a lot to reverse the market for me. So let me explain this. If I set this like 200, watch what this looks like. That's it. Like, this is the whole point of what I wanted to end with. I really wanted to show you how to take this system and now turn it into, I'm not trying to figure shit out, to what's the best way to do this. The answer is setting the reversal to massive, massive numbers and then catching those wick trades on those flips. That's how you take this. It's Bradley. See, here, let me say this. I'm not the one saying I made a money-making machine. Everybody else can say it this time. I do make money-making machines. Automated trading systems are built to make money. And that's what they do. They do what you program it to do. So when I look at this, I would really just take a look at these reversals. Like, you may only get 1 or 2 in a day. Who cares if you're getting really ass-kicking trades? And when you do get them, that's all you need. Like, really wicked. This is how I would set this. Yeah, this is how I would set this. Yeah. Yeah. All you need, 20 accounts. Exactly, Bradley. Yeah. Yeah. But I just want you to see it. Like today, if you look at today, the way I start at 5:30. That's right there. So there would have been 2 really badass trades today. And you can see them here, like really badass trades right there. And if you had the trend trade, you had it there, and you had the trend trade there or here. You see that? And all you need is that and that on 20 accounts. You're not getting around flipping and flopping. Like, it's that powerful. You can even set it to a bigger reversal and probably avoid this. You see what I mean? You could probably avoid that little bit of a flip flop. because I would rather, like, you could even set it to like this is how exciting that this system gets. And I'll explain why it gets that exciting. Okay. You can basically, you might only have one leg in a day. And, you know, I think you got to be mindful of having it too big, but I would arguably want to look for at least 2 to 3 legs a day is what I'd be looking for. So if I set it to like 180, okay, and I set it to like 2 to 3 legs a day, if I, and see this, to me, it's still too restrictive for me. I'm going to set this to 200. Yeah, 200 was a good setting. 10x. So what I'm going to do is like, take a look at this. I've got, if I started at in the European session, it's 1 leg, 2 legs, 3 legs today, where I had an opportunity to take 3 trades, or maybe 6 trades if I'm turning on the second trade of that environment. So let's take a look at this. Okay, this was the results that came back from that setting. Okay, and there it is, net profit, smallest drawdown, right here, right there. That's the one right there. Now that changed the setting because I added, remember, I added that to it. I added the ability to go from 100 bars. See what I'm saying with that? I added that. I made it more flexible. So this is where I really want you to understand, like, and what I truly think is that there's too many flips on this time frame. I really like the idea of running it on something like this, right? With really big reversals. You're not having to deal with all that. You're not having to deal with all that. I would literally switch this to like a 200 tick reversal, and you're going to have completely different narrative, right? Because you're going to get these big wick opportunities that are coming from those big reversals. And so let's take a look at this. If I have a 200 tick reversal, bar type is 20 ticks, so 22 stop. Okay, and I want to run really tight stops on, like, let's say I just want a 22 tick stop, like really tight stops. Watch we could take a look at this. Okay, and then I could run. Give it a second. I'm just going to show you some different concepts now for scalping on a completely different environment. If I'm going to go stop loss 22, I'll do, let's just say 0.5 of that. So that's 11 ticks. And 2 to 1 would be 44, right? So I'll just run 11 to 44, right? You guys with me on this? I'm just going to show you the difference between running a completely different narrative on big reversals. Okay. And, you know, I'm fine just running like 1 increments on profits. Like I could go up in like I just run in 1 increments, because I'm not changing. I'm not optimizing for anything up here. I'm not optimizing for anything there. These types of things, right? And I could change this to not having it so far in the leg. But, you know, I think the idea would be we can increase the max signals after. We'll change that after. And that's the only thing that I would change would be max bars to signals, because you want to see how many signals you get in a leg. If you have huge reversals, I would argue that you would want to increase this. Why would you want to do that? Think about this. If you're not getting a lot of reversals, then you might want to take the wick in the middle of the leg, right? If you have such a huge reversal like that, why would you not want to take that trade and that trade if that's like 200 bars into that leg? You understand where I'm going with that? Because you don't have a lot of reversals. So let's just change this to 10,000 bars. Just to show you I'm not putting a restriction on the leg. That answered the question. Yeah. That answered your question, Bart? Yeah. Minimum wick size, I'm going with 10 ticks, half of the bar size, right? Minimum 10 ticks. So let's rock it. I'm going to go for a maximum of 2 to 1 R multiple on this. And let's just run this all the way through to, like, we could run it in the morning. You can run in the European session, whatever you choose to. It's your call. But I'm just letting you know you can change that. And then let's go down to the actual variables. And let's just take a look. What is that? What is this going to produce? Let's just check it out. How many of you guys love it? I love this system. Like, I think it's just, I'm just, because I'm all about the price action on this. Like, yeah, the algo course, we'll give it a sec here. Let's take a look at that. So inside of the members area, let me just take a look here. Bear with me, guys. Gotta find the link. So what we have here, okay, is a whole bunch of resources here. One of the things that we do with all of the algos is whenever you buy an algo, there's an algo course that we give, because we want you to understand the things that we're talking about. Cheat sheets, information and cheat sheets, timeframes and fractals, types of markets that we're covering, how to set your risks and settings, how to define your order parameters, how to define your timeframes, right? Money management, order handling, back testing, forward testing. So everything that we're talking about it comes with every algo that we sell, because we want you to understand the foundation. These AMAs will get put here, like we'll have an AMA video here, and you'll be able to have this AMA in any future training as well. But the nice thing is this cheat sheet, like this is a cheat sheet that we've got a lot of information on fractals, testing notes, template information, then just back tests that I've run and I post pictures for, okay? But all of that's part of the download. Like if you click here, it says convert time to Renko, open that. It's going to bring you to a Renko conversion document that we have, right? So you understand the different fractals. So if you're new here, I can assure you that we can get on a call with you. We can help you understand the resources, no problem. You know, cheat sheets, workspaces, templates, algo course videos, that type of stuff, right? Now, let's just take a look. To me, okay, take a look here. Maybe not the best setting, right? Take a look at the win rate on that, right? You can see, let's just sort through net profit. Net profit to smallest drawdown was here, 13 trades, but it's 50% hit rate. So what does that tell you? That means the stops and targets are very big. It means the stops and targets are very big, right? So if I go in and I take a look at this, okay, means and I missed trades. You can see that the missed fills here, those would have been winning trades because we have to fix that update. But take a look. Like to me, a 22 tick stop, remember how I was hugging that stop? And this is why I was saying that you may not want to have the scalp stop just like this. You know, if I'm running a reversal, I might want to optimize to, if the reversal is 200 ticks, right? Minimum stop size of 22 ticks. You go up in 10 tick increments. I'll show you what I mean by this. That'll change the narrative completely. 10, and I'm just going to show you an example of taking something that you may not think is good, and it becomes really great very, very quickly when you understand. When you update what programs, Kevin? You mean like video programs or templates? So if I go 200 stop loss, if I end up going with 200 tick stop loss on a NASDAQ, it's not a big stop really. It's $200, something like that, right? But if I go to your 200 tick profit target and I do a 10 tick minimum, watch. This allows me to do a 1-to-1 arm multiple on both smallest to largest, and we're going to go up in 10 tick increments. We're going to see a completely different perspective. And that's what I wanted. I wanted this day to be about showing you how to take what we have that is awesome, but if you want to test it on various time frame variables, because there's no one size fits all with the wicker. Like the wicker is, you can change it to be like in this environment, like, do you care if you have a big stop or a small stop? It really depends on how big your reversals are, right? Like it depends on what you're looking to accomplish with this. And we haven't even scratched the surface with the reversal trades. Like if I wanted to, I could turn this into the reversal signal. We're just talking about the wicker. So here's where I think you could create a combo template, which I think is very powerful. What do you think I'm going to say here? For those of you that have a little bit experienced, like, what do you think I'm going to say when it comes to the combo template? R plus wicker equals ching ching. Why do you think that? Think about this. If you have big reversal settings, okay, there was no wick here. There was no wick here, but those were big reversals, right? There was a reversal and a wick here. And either way, you would have got into the reversal first because the wicker gave the signal. You see this? Sometimes you'll get the reversal here. Depending on what the stop loss and the target is, you might take a profit, catch the next wicker trade right here. You understand where I'm going with that? That's the whole, when I'm saying that, right? And this is why I'm just sharing that with you. It's, you could take a combo template like this and make it so you can have both. Take a look at net profit, sort by profit factor. Take a look at this one here. Let's just go down to max drawdown. What's the smallest drawdown? Yeah, the drawdown, of course. Let's take a look here. Drawdown right there. No, that's not good enough for me. I don't like the settings. Don't like the settings on this, right? So what I'm going to do, how do you handle market trading different each day? I don't handle that differently each day. The one thing that I'm looking at is I'm trying to avoid it trading differently each day. It doesn't matter if the market goes trending or oscillating. If I have a setting like this, like think about this for a second, right? If I have a market like this, I can see what it's doing without it being trending or oscillating. All I care about is when it flips. Kevin's asking, you keep saying you're going to fix this or that. Is that a glitch or do you mean change? No, what I mean is if you take a look at these yellow, we talked about this a few times. Maybe you missed that, Kevin. I'll explain it. These were, we have a safeguard for news and for market open. And I'm not saying I'm trying to fix this or fix that. I'm explaining it as easy as I can. There's a safeguard here, which means you missed fills. And that's a safeguard because some people don't turn their algos off in the news and they come bitching and crying because they get stopped out because they don't understand that, right? So what I'm trying to say is we put a safeguard in here, but a lot of people are asking that we remove the safeguard. And so I said, we just decided to turn it on or off. We're adding a setting that you can turn that on or off so that you would get filled in those trades without it being on the same timestamp. We're not changing anything. No problem, Kevin. So what I'm suggesting here, and this is my promise to everybody as well, is that I spent a lot of time looking at the S&P. I didn't get a chance to spend a lot of time testing the NASDAQ, but apparently a lot of you guys like to trade the NASDAQ. So my promise to you is that I'm going to spend some extra time and put out some awesome templates for the NQ, right? Would you rather me do the MNQ or the NQ? I think the MNQ makes sense because the NQ would be too big a stop losses for risk, right? MNQ, yeah. Yeah. Right. But what I'm suggesting is that for those of you that like that, what I'm going to do is I'm going to build some templates and I'll do some testing because I've got a lot of experience in this. So I will definitely, I'll definitely put on my testing computer. I'll build out some templates for the NQ and some variables. I like using the 20 tick bar size. I think it's just a good starting point. You could use a 10 tick bar size. You're just going to get a lot more wicks, right? Yeah, you could trade the S&P standard, Bradley, if you wanted to. It's just depending on the reversal setting. But I guess what I'm trying to say is that I want to be able to give you guys an awesome template for the NQ. I just haven't had the time. We launched yesterday and I hadn't tested it yet. So if you guys just give me a little bit of time, I promise you I'll send it out once it's ready. To me, I see a lot of information here on these wicker signals that could be very, very, very successful. Let's just add a couple days. Let's just go back to some random days, because what's nice about these types of variables, if I go all the way back to some random day, what do you see? Same story. Now, I think what's going to happen, I think what's going to end up happening is we're going to have the templates. If you're going to basically have these big reversals like this, I think what's going to happen is you're going to have larger stops and smaller targets, but you're going to have really good success ratios with it. Why? Because you're allowing yourself to get into a wicker trade like this and not get low ticked on a wick like this, but then capture big moves, right? You'll get into a big wick trade like this and capture big moves if you allow yourself to do that. Now, I'm going to test small stops and big stops, and I'll send the templates out for both, right? I will do that, right? But you can take a look at, like, when you get a run like this, right? It's take a look at this. Great example of a wicker trade. Wicker trade, long here, right? Exactly. So you can see why I'm doing this, just to basically remove the noise. And I will not test it on like 3 days of data, guys. Like, I will run, if I'm going to run this variable, I will test this for an entire month to get the best, because you can't go off of a small sample size. You have to, and that's why it takes about 4 or 5 hours to run my optimizations. But I'm going to come back with some really awesome statistics that will give you the foundation that you guys would need it on, right? And I'm actually able to even able to optimize for the data series. So I'll give you an example. Let's say I use a 20 bar type. If I want to optimize the data series right here, I can go down here to optimize data series. Okay. And then take a look. I can basically, I can optimize the data series too. But the key here is that I want to basically give you guys a foundation on the NASDAQ that I don't have ready yet, and I will. I can assure you I will. It'll be ready very soon. Okay. So that's kind of the foundation of the wicker. The reversal is kind of another foundation as well. We haven't talked about the Momo trades and whatnot. Did you learn something? That's important. Give me a yes if you found this good, you learned something, you took some value from it. Good. A lot of information. I promise you this, that I will be coming with a whole lot more education on algos, on each of the algos. The VD algo as well, we're going to start talking about testing different cluster sizes and giving different narratives. We've got a lot of systems that we have built and sold, and that we've got a lot of strategy templates for every strategy. But what I'll do is I'll tell you that we're not going to just sell you products and then ultimately not train you on it. It's just, it takes time to get them out and to basically teach everything in stages. And I can assure you that I'll be doing a lot more training on all the algos. So every time I meet with an AMA, rest assured, you're not going to be just left in the dark. We've got a lot of them coming. We're going to do them for each AMA, each system. For this, I plan on doing more training on the hybrid algo, mainly because there's 4 settings. There's four signals. We only really spent a lot of time talking about the wicker and the reversal, but we didn't even get a chance to finish the reversal, right? So what I'm going to do is, Jim, if you're here, Jeff, if you're here, give me 1 second. Yeah, I know he's not here, but I'm just pinging you here. Yeah. So let me do this. I want to run a poll because what I'm going to do is there's a lot of people that don't own the software in here, and a lot of people that do. What I want to do is I'm going to set together another AMA, but only for users. It'll be outside of the algo week, mainly because I want to do it just specific on this system. Okay. And Bart says, yeah, dude. Yeah. Bart, thanks. Really awesome. Thank you. Not a problem. What I'm going to do is I'm going to launch a poll. I just need to know if you're planning on getting the software, because I'm going to be setting a private closed group training on this for only people that have it. I want to make sure that everybody understands. If you've already purchased it, don't worry about it. If you need help talking to someone, let us know. Because I want to spend a little bit more in-depth training once I have the NASDAQ templates ready and once I have a little bit more testing. If you've already purchased it, great. That's no problem. And this isn't, I'm not trying to do some big pitch here, guys. If I'm going to do training, I need to know how many people are going to be a part of it. I want to know like who's coming, how many people, etc. Maggie won the giveaway. Everybody give Maggie a round of applause. Amazing, right? So what I'm going to do is I'm going to give you the link here, guys. We have the promo. Okay, we have the promo in here running. You can basically see that. Congrats, Maggie. We're going to be doing an algo week for all algos. Everybody will be invited to that. But I want to do more training on each specific algo for only people that own those algos. So I just need to know how many people are going to be buying this before I shut down and take a couple of days off, so that when I come back, I can prepare for that. Jeff, can you grab Al's phone number so that we can have Jim and the team call him, please? Yep. And for those of you that would like to speak to somebody, just, we've got your email. We'll have our team contact you and we will definitely help you out. Okay. Yeah, Bart, no problem. I can send you the data. I can assure you you'll be happy with it. Yeah. Just send Jeff an email. Got your back. Not a problem. Yeah. Okay. Guys, I think that's it. I want to thank you guys for your time and your effort in here and being here with me. I appreciate it. I love doing these sessions. They're really kind of by the cuff. You know, it's not like we have one specific thing we want to show you, but I really want to show you the power of what we've built here, because this is not some like random tool. Like, this is a very powerful price action system that used correctly can yield very, very different narratives for a lot of people. And I really want to spend the time testing it as well, because I do think that with the right settings, I think it could be really deployed by a lot of people in a different way than, say, the scalping systems are. Like, it's and it could be very much still be a scalping system, but it's hard to compare this strategy with other algos. They're not in the same environment. Yeah. Not a problem, Wilton. Shoot an email in and we'll get our sales team to contact you. Thanks for everybody's kind wishes on the wedding. You know, it's fell in love a couple of years ago and haven't looked back. You know, she's been the best thing that's ever happened to me. She's good for me. Keeps me on the straight and narrow. Right? We all need a good one. We all need a good woman beside us, for all you men out there. Right? Anyways, guys, thanks for being here. Hope you enjoyed the AMA, and you know, thanks for your brand loyalty, your business, your effort, your customer gratitude. I mean, we really work hard to try to bring these products to you guys, and hopefully you guys see the benefit of that. So yeah, you know, it'll be in New York. Yeah, we're getting married in New York on Wall Street. Yeah. Well, we're not doing the honeymoon until December. We're going to do a trip in Thailand, but I want to be able to take enough time off where I'm not stuck behind the screens. Yeah. Yeah. Anyways, guys, have a fantastic day. Enjoy your Easter weekend, and we'll talk soon. Have a great one.